Welcome. My name is Paul Archer. Welcome to our mortgage live stream. I'm really excited today, actually, not because the Cheltenham Festival has started. If you're into racing, as you know, it's packed out there at the moment, and I'm keeping underground for these few days if I can do. But I'm very excited because we're joined today by a real practicing, very good, successful mortgage and protection advisor. Hopefully, not too embarrassed there, Rhys, with my introduction to you.
Yes,
Welcome, Rhys.
thank you. Former mortgage advisor. It means I can't use this old Metallica of Mortgages title that I got given by Derbyshire Live one day, but which is a shame. I need something as cool for protection. But yes.
Brilliant stuff. Well, we've gone live to various places here. I've got to LinkedIn, YouTube, and Facebook, and we're joined together today by Rhys. And welcome to our mortgage live stream. What I'm going to do is I'm going to chat to Rhys, get him to introduce himself in a second, and get you really chatting and talking about business protection and protection in general. So, Rhys, before we go any further, because I don't want to do too much talking today, tell us about yourself. Tell me about yourself and how you get into the business.
How I got into this? Well, I finished university with a Desmond in sociology, which it turns out can't get you a job. A sociology degree, B because it's a 2-2. And I fell into working in a second charge brokerage just before credit crunch. All of a sudden, the lenders disappeared overnight. SPML mortgages, those were the days. And then I got made redundant, ended up working for Lloyds Banking Group there for a couple of years, found my way to broking, ended up a regional for Spice of Heart. I set up Peak about 6 or 7 years ago now, I think it was. Grew this business as a mortgage brokerage for a couple of years. I think by the time I sold to John and Lisa at Mortgage First, 17, 18 advisors, something like that. And then I've been back to protection advising now full time since last summer, and I love it. I don't have to worry about what anyone else is doing. Get to talk about something I'm passionate about. Specialise on the things I want to specialise in, and I don't have to work really hard to pay the rent and everyone else's bills, so that's very nice too.
Brilliant. Well, thanks for the introduction there. Appreciate that. And full-time protection. Now, what I want to steer away from, though, is protection in general. I want to talk about business protection, if I can do. And business protection is often overlooked by advisors, particularly those dealing with the buy-to-let world as well. Why do you think that is, Rhys?
I think it's because people don't know much about it. I think more than anything else, or maybe they do know what it is, but aren't comfortable enough to discuss it. I think this might be a controversial statement, but I think if you're dealing with a customer who's a limited company director, they absolutely should be taking protection advice from someone who knows a little bit about the options. They certainly need to be able to do relevant life cover at the very least, because if they're a salaried director, business should be paying for their life cover at the end of the day, tax deductible. It's just a complete no-brainer. But I think maybe, especially when it comes off the back of mortgages, sometimes there's risk that we can fall into, and we've all been tempted as mortgage advisors to slip into this trap of the protection need is just to cover the mortgage. You see a decreasing term, life and kick. If you're lucky and nothing else, you've not had a proper protection conversation at that point, if that's all you do, because what about the wider picture? And I think a lot of it stems from that. We'll go off on a tangent here, but I've managed big teams of mortgage advisors, and I've always said that the easiest way for me to gauge how good a protection conversation someone's having is income protection, because that tells me you have actually had a proper delve into that. I think we're getting better, but we're not good enough on there. But if that's the policy that's most likely to get used is still in the doldrums from take-up rates, I don't think these conversations are happening in an in-depth enough way, or maybe they are treated as a bit of a bolt-on to the mortgage conversation, and the customer sees it, feels it, and you don't get someone opening up. And then, like I said, there's the knowledge side of things too, and being comfortable enough to talk about it with your clients.
No, knowledge is important, isn't it? When it comes to the business clients, then how do you position yourself, Rhys, with the business clients when it comes to protection?
Yeah, I just say, look, I said, this is what I specialise in. If you're a company director, you're going to
Mm,
talk. You're going to talk to me about what you need to do. I don't want you to get stressed out about what key person cover is, what relevant life cover is, blah 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 blah, all that sort of thing. Because at its core, really, in the main, doesn't matter whether it's personal life cover, critical illness cover, or income protection. Generally, it's broadly similar policies. The difference is who's paying for it, what trusts you've got to do, who gets the money when it pays out. Really, you're just going to tell me what the problems are, what the pinch points are. I'm then going to go away and come up with the solutions, and I'm going to try and make it as tax efficient as possible for you too. I love telling people about the Anderson principles. My favorite fact is, I believe it's the same guy who's the reason why Anderson bomb shelters are also named
okay.
after the guy who was Chancellor of the Exchequer that made these rules 80 years ago that we still have to jump through the hoops for now. But you're going to give me a set of problems and pinch points, and I'm going to come up with a solution, and then we will tinker on the screen and build it together, because I'm very
Yeah.
big on the customer being involved in the process too. I want to bring them along for the journey, but you just tell me problems. Don't worry about the solutions yet. I'll tell you what the solutions are and guide you in the right direction.
Let's pick up on that phrase you used, problems and pinch points. Tell us more about what you mean by that, then, Rhys.
So problems and pinch points is what keeps people up at night. Are
Mm,
they worried about if they drop dead? Who's going to look after the family?
mm,
Are they worried about, I have no safety net because I'm a company director. I get no sick pay. I'm really on my butt in 30 days' time with real problems paying the bills. It could be you're a business that's growing and you've got to that point where you've got a sales manager or an ops director who's absolutely pivotal. It's a big deal with you dying, your family's in bother there, but your family's in as much bother if your sales director dies as well, because they're still going to take a whacking great big hit to the family income. You could still lose your house over that eventuality. So it's actually quite an informal chat, because I don't want it to feel like I'm dictating what is and isn't important. It's you're guiding the conversation to a point where the customer is telling you what those
yeah.
pinch points are, and then you to and fro a little bit. There's an awful lot of active listening and all that sort of thing, and making sure that you're on the same wavelength about what the pinch points are. But it's what keeps you up at night. I mean, I'm going to recommend that you do everything, but I think everything that you need, but that real world, we're going to end up doing what's most important to you at the end of the day. So it's worth finding out what your customers are thinking. I mean, generally the very first question I ask a customer is where their head. We're having a protection conversation. Where's your head at, and why have you decided you want to talk to me? Because very often they will actually open up and tell you their pinch points and give you a huge amount of work from the start.
Gotcha. A lot of people listening to the call today, Rhys, will be mortgage brokers, mortgage advisors who are in the commercial space, development finance, and they've got business people as their clients. And many of them, of course, will be quite familiar with talking about protection for families, that kind of thing. But when it comes to businesses, many of them seem not to want to talk about business protection. Why do you think that is initially?
I think it's this whole thing that comes off mortgages. I mean, the amount of times I've heard over the years managing mortgage advisors, oh yeah, they didn't want to talk protection, it's a buy to let. Well, it might be that's not, maybe protecting the mortgage might not be such an issue, but are they otherwise protected? I think the big thing as well with the commercial side of things, this might be some commercial borrowing, but who's the bank going to come after if they die? Is there a personal guarantee? This is higher risk lending. The reason it costs more money, it's higher risk lending. There's more risk for things to go Pete Tong. The need for business loan protection potentially is even greater than just the resi mortgage. You'll get a stay of execution if it's your main residence. They're not going to turf you out straight away. You might they might come after you for the money much quicker if you're doing a commercial deal that goes wrong.
That's a good point, that, because it's banks and specialist finances, isn't it?
Mm.
Most of it's unregulated to a degree as well, so they're not on their own comps. Yeah, it's a good point, that one. So you've got a business then who may not have thought about protection. They've come to the broker for some finance. How would you get the business owner to start thinking about protection if they've never thought about it before? How
Yeah,
would you
I would not try and build solutions and chuck solutions at them until you know what the problems are, because actually you need to listen first. Seek first to understand before being understood. I can't remember who said that. Someone way wittier than I am, but I'm just copying it. But I think it's very, very true. I think you need to warm your clients up a little bit more, and actually slowly catch your monkey. You might want to sow some seeds that this is something that we really need to deal with right from the beginning. Okay, we're looking at the commercial finance side of things, but we have a problem here. You need to start thinking a little bit about this, because we're potentially exposing you from a risk point of view. We're exposing you and your family, and keep sowing those seeds. And then make it very clear from the start that actually, as part of your mortgage sign-up process, we're going to get you speaking to either do it yourself if you're qualified, or refer it to someone who is going to have that conversation with you holistically to look at this properly, because you're potentially in a bit of a pickle if things go wrong. We need to get you to talk to someone who knows what they're doing and can work with you to come up with something that helps you sleep at night a little bit easier.
Yeah, I like that. I mean, the key one there is the financing or whatever we're doing is potentially putting them at risk.
It is, yeah.
So let's talk more about risk. Somebody once said to me that approaching businesses is very different to approaching personal clients when it comes to protection. What aspect of the risk do you talk about? I mean, how important is risk or risk averse corporate clients? Is it something that appeals to them or worries them?
Yeah, well, I mean, I think first things first is that many, and rightly or wrongly, think if the company's paying for it, it's free money, so I'll spend what it costs. So there's a reason why your annual average premium on relevant life or key person cover is a heck of a lot more than your average personal premium. We're talking around £1,000 a month figure. Yeah. Now, I don't get that many of those cases every single day. I'd work 4 days a year if I did, but someone's doing those sorts of deals. I would say that I think it's talking to the right person in the business. A lot of the time, the person who's driving all the growth is a bit of a risk taker. There's a reason they went self-employed and set up their own business in the first place. Mm-hmm. It's normally, you might need to talk to the person who's there to make sure that the company doesn't run out of money and things go wrong. So it could be the finance director, and very often it's finance directors who actually get in touch with me if it's a direct client, because they're the person who realizes, hey, we actually run out of money, and everyone loses their job if such and such happens to so and so. Especially on the key person cover side of things, I think if you run a business and you're reliant on a few key people, your family and being able to keep living in their house is not just reliant on you not dying, it's reliant on 3 or 4 other people not dying. Yeah. You're trebling, quadrupling your risk of something going wrong. You also, as a business owner, dependent on your moral compass, and I know where moral compass was on this, but you've also responsible for the financial well-being and the livelihood of maybe a big team of people. So you could actually have 20 or 30 other people as well as yourself who are reliant on the business having enough money if anything happens to such and such within the business. So you're massively increasing your likelihood. Where we do these protection risk reports for clients, and I think these are fantastic, where you tell your customer your statistical probability of dying before the end of their mortgage. I think it's a fantastic tool because it's very real. Okay, it doesn't look very high when it's 3 or 4% of not making it to the end of the mortgage. But when you're talking about it actually being 10%, 15%, 20%, that something's going to happen to someone at some point, you need to be doing something about this.
Yeah, that's a good description of the risks involved in a business, and what you're saying. It's more than just the personal risk, isn't it? It's a bit the risk of the business
Yeah.
to the employees. There's other directors to think about as well.
Yeah.
You mentioned also the accounting director getting in touch with you. She would approach you. When you're dealing with businesses, are you typically dealing with several people in a decision unit kind of thing?
It depends. It depends. Most business protection is company directors, and it's certainly what I deal with is mortgage brokers sending someone over to me who's a company director. They don't do too many of these sorts of cases, and they could muddle through, but they don't. There's also a good chance that they lose it because they don't know what they're talking about. So rather than get good to do it once a year, just hand it off to someone who knows it's in safe hands. So those ones you don't have a huge amount of decision makers that you've got to deal with. But then if you get a bigger business, maybe there's a reason I don't have a mullet anymore, because I was back to doing more business protection. At the start of the year, I realised I can't go to a boardroom and turn up with a bleached blonde mullet and be taken seriously. So look, I'm even wearing a shirt with a collar today. I'm a massive corporate sellout. And I think sometimes there is several conversations, or you get some numbers ready to give to whoever's reached out to you to then present to the decision makers within the business. And I've gone in and sat and presented to a board as well. I mean, region specific. I wouldn't go to John O'Groats to do it. I'd say we'd probably have to do this on Teams. So there's a certain degree of, maybe more on the group and the PMI side of things. That very often is for a business where there's more decision makers. So sometimes it is a bit of a slow burn where someone gives you a brief and you go away and get a load of figures, and then you work with them to get it through and past the decision makers. Sometimes, we actually deal with the FD, but then it's someone else who has to sign it all off at the end anyway. So it's you have to think on your feet a little bit, and you probably have to be a little bit familiar with how that side of things works as well. And I remember the first couple of cases I did like that, I was a bit uneasy because I just didn't have any experience for working like that. But on the flip side, it's almost a positive thing because it all works off reason and logic. At that point, we're taking the emotion out of it to a certain degree. So you often find that they just make decisions because, this is something we've got to have and it costs what it costs. And that's an interesting way. And they want to do it well as well, but it's an interesting way to work. I'll tell you, I picked up a case for a firm, about 60 employees, and they've been writing into their contracts for the last 3 or 4 years that everyone gets 4 times salary death in service. And it turned out that they didn't have an insurance policy to deal with this, and they certainly didn't have 4 times salary sat around in their bank account. And they were like, well, fine, we've just got to do it at the end of the day. So it's an interesting way to work. It is a bit different.
That's a good story, that one. A couple of good points there. Obviously, emotion's key, isn't it? When you're dealing with personal protection for families and stuff like that, it's all about personal emotions, isn't it? But with businesses, it's about logic, it's about risk, evasion of risk, logic, cost.
Yeah, it is, and I think that's the core. Are we going to do it or not? Is down to logic. But then, don't get me wrong. There's still cool stuff that you can do. So, let's say we were doing a group life cover. Well, we know if we stick that with Aviva, we can get everyone on the scheme and their families electronic GP. So all of a sudden, you've taken the bare bones of employee benefit scheme. There's something that people will only think about once every 5-10 years, but hopefully they never have to think about it because they don't die whilst they work for you. But then we've made it actually, this is something that they might use every couple of months when they need to talk to a doctor. And it doesn't really cost anymore, but that's the bit where talking to an advisor to do these things is fantastic, because you know what you're talking about. You can guide them in a direction that actually adds real value for the employer, and the employer looks great in the eyes of the employees just because they've gone with an insurer that was could be as little a difference as £10 a month, but they got something which makes their staff want to stay and work for them. It's great.
Staff work for them. That's an interesting one. So when it comes to the benefits of business protection, obviously you've got this risk thing that we know about, avoiding risk. But what other benefits do you talk to about business protection?
I think it depends. I think a lot of the time there's the benefits to the business, which is risk mitigation, really.
Yeah.
I think for employees, and this is a huge growth area, flowing into maybe why we're doing so much PMI these days as well. And I find myself doing as much PMI as I do protection at the moment. It's not as simple, and it's getting increasingly expensive to just chuck money at employees so they can maybe get 20 or 30 quid more each month after the taxman's taken his fill. It's getting to the point where actually you get more bang for your buck when a lot of this is about making your employees want to continue working for you and not going to a competitor. You might actually get more bang for your buck by creating a good employee benefits package. Could be as simple as, I was in with a team last week of video editors for social media. They're a fantastic young group of people, and we've done a vitality scheme for them. And I went in to make sure they're only around the corner from my house, so I went in to check they were all set up on their apps and it all worked. They're all already on there. They're all talking to each other about how many points I've earned and all that sort of thing. And they're almost getting competitive, and they're engaging the scheme, and they're already thinking about their free cinema tickets and all this. And they don't see that this has come from Vitality. They're like, oh, my employer's got me free cinema tickets and discounted gym membership and stuff like that. And it's fantastic. And then, moving into the world of private medical, let's say we get to 15 members with Bupa. We can do full medical history disregarded underwriting there. We could get everyone, including their families as well, if they wanted to do it. We could get everyone cover for even pre-existing medical conditions because they're on a scheme with more than 15 members. Let's say that employee gets offered a job at a competitor, but their other half or their children are using that private medical with Bupa for something close to them. They are not going to jump ship to go to work for a competitor and lose their family being able to access that private medical treatment. And you're doing it for the right reasons. You provided something that's really great for an employee, but you've also made you've given a benefit to an employee that they really value, and they are not going to leave you over, a grand or two more in income a year. They're going to stick with you because you've done the right thing. Yeah,
that's a great story, great example, isn't it, about the benefits to the employee and get that.
Well, they're not going to be able to set up their own scheme because you need 15 members. So unless they get 15 people and can work out a way of getting MHD underwriting through on a personal private medical plan, it ain't going to happen. So there's ingenious ways just by doing something nice that you can make it so an employee does not go and work for a competitor.
Brilliant. A couple of things you mentioned there. Firstly, that you do get referrals from mortgage advisors, mortgage brokers, finance brokers who don't want to deal with it. I get that. So before we finish today, make sure you give us your contact details so people can do that for you. That would be a brilliant one. Let's go back to the sales process of all of this. And before I ask you a question about prospecting and how you prospect for business, how you get business clients, do you have a specific sales process that you work with when it comes to business protection?
Yes, yeah. As much as I am informal and conversational and is very relaxed, I do have a process that I try to follow. It's bullet points. It's a page of A4. I'm not perfect. I try to do it as much of it as often as I can. I don't like cutting corners. You cut one corner, you make two. But I do have it, and it's normally I want to get from point A to point B, and I need to make sure I do these things along the way, and it's the order in which those things happen that gets the best results for myself and the clients who feel brought along for the journey. My big thing when I was writing my sales process is I didn't want my clients to feel like they've been sold to. I want them to feel like they've bought something that they want and understand, and they get why they need it. And touch wood, I don't get many cancellations because my process is very geared up towards, I'm very visual, and I will screen share whether I'm in person or on Teams. I'll bring Solution Builder up and we will build the solution with the client. Your client then feels like they have chosen what they've done. You've not sold it. That is their purchase that they've made. You're there to guide them and keep them out of any bear traps. it works so well, and that's the process that I follow pretty religiously, if I'm honest. But I'm not perfect. There are days where
Well,
you're in a rush, or something throws you a curveball and you forget to do a bit of it. But don't beat yourself about that. Up about that. It just happens. But try and do it as often as you can, as well as you can.
good for you. I mean, top line, what's the sales process look like? What sort of step? How do
Yeah,
you
so we'll have a bit of a chit chat. We'll go through our initial disclosures. Initial disclosures are fantastic as well, because you present it in the right way. You can sell yourself as an expert. So, I mean, I'll still drop in there final 3 for top protection broker in the UK at the BMAs a few years ago. I've been up for something else sooner, but I can't actually remember what awards I've been nominated for. I never bloody win anyway, because I don't like going to awards dues. But right from the off, you're creating a little bit of proof that you're decent, and you know what you're doing. Fact find, get your hard and soft facts, build the solution. Because I'm doing standalone protection, I am able to kind of an hour and a half and try and do everything. I'll then also do my medical questions. Even if someone wants to think about it, do your medical questions. Get an application submitted for what they're leaning towards. You have all the time in the world, 3 months to think about it, depends on provider. But let's get final terms. That gets this bottleneck out the way, because this huge bottleneck is people leaving medical questions till later. Do your bloody medical questions. Get something. There's that many options out there. I like Underwrite Me. It's free. I've got a format to get all my medical questions, and I'll source it later and do it all properly later. But as long as I've got my medical questions done, I know what I'm doing. And then hopefully you get terms, and hopefully you can get it live straight away. There's some more points, but headline, that's pretty much what it is. I think the important bit is the warming the client up, and like I said, building the solution with them on after you fact find, building the solution with them on Solution Builder is probably the huge thing for me. You'll do it slightly differently if you're doing mortgages. You'll probably break things up a little bit. I'd certainly say you probably bring up Solution Builder and your mortgage sign up, and you do your medical questions in your mortgage sign up as well. I think if the customer is genuinely maybe going to do protection, I would make sure that I was doing medical questions for every single mortgage sign up. There are advisors I know who the first thing they do on a mortgage sign up appointment is they do medical questions before getting anything else, and they tell their clients, look, I'm going to get the worst job out of the way. I'm going to do a set of medical questions, so it's done, and then we can talk about the bit we want to talk about, which is the mortgage, and then they circle back to the protection, and they've got the customer's attention the whole time.
That's brilliant. You've got a great system there, great process going on there as well. You mentioned that the important part is at the beginning when you're talking with disclosure, and you're setting your stall out, call it what you like. I mean, any key phrases that you like to use at that point to get a good impression started?
I think if we're talking to the guys who are listening today, and most of them will probably be mortgage advisors, is my advice is we need to make sure that the protection is as important as the mortgage. And that is very clear right from your initial disclosures. I'm a protection advisor as well. I'm good at what I do. We're going to talk about this properly. And there's a few things which I use, and I know firms who I work with I used to use. I don't do mortgages anymore, like I said, but I know that advisors use this to great effect. They do their fact find on the screen with their customer. Depending on your network, there's probably a protection section on there. I tell you what, if your client can see you have to put some information in about their existing protection, guess what? They tell you about their existing protection. You never get this, I don't want to talk about it, which is an absolute bollocks excuse for an advisor didn't want to talk about it really, and probably didn't tee up that this was something we were going to talk about properly. So yeah, that helps. I think a big thing that also works is if you do that, you can probably issue a protection risk report to your client at the end. You've got the data to do it, either be incorporated in your system, or LV and some of the other providers will let you do protection risk report. Chances of XYZ happening, maybe even having an indicative premium as to what it would cost on there. And I think this is the huge thing that make a big difference for mortgage advisors. If you send your customer away, don't do this on your budget planner. What's your protection budget? how many customers come to an appointment knowing what they need to spend on protection? They don't bloody know. So give them their risk report, statistical probabilities of X, Y, Z happening. If you've got a couple, what I want you to do, your homework for this appointment, and I do refer to it as homework, and I encourage advisors to do it. Your homework is to talk about this protection risk report, work out what worries you the most, and work out what you're comfortable spending on that each month. All of a sudden, your customers come. So, if an advisor is struggling on protection sales, chances are it's actually the first appointment that's the problem and not warming your customer up. You're trying to do too much in your sign up. But if you do that properly with the homework, all of a sudden your customers come into your mortgage sign up, and protection isn't a yes, am I going to do it or not? It is a what am I going to do and what am I going to spend on it? So you're always doing something in the main. You're not going to you're not going to get everybody. Medical history might mean that you can't. You will get some people who are idiots. And think it will never happen to them, or you get them to sign a letter to say, right, don't sue me. That's a real reality check sometimes. But that homework is the real key. If you do a 2-appointment process, and in the main, we probably do a 2-appointment process because it's too much to do in one go, even if a customer has already had an offer accepted. Do a first appointment. I'm going to go away and get all my paperwork ready. We can even do the next appointment the next day. But have a 2-appointment process, set the homework, give them that protection risk report, but make it very clear that this is all part of the same process. The only reason a customer will think that protection isn't part of the process is if you let the customer think that it isn't part of the process.
Brilliant psychology, isn't it, when it comes to a couple of final points before we wrap up, and top tips and Rhys for a mortgage advisor who's involved in the specialist finance side of things. They're doing the bridging, they're doing the seconds, they're doing the development finance, the business buy-to-lets. They've got customers in front of them who are business owners. Top tips for them, do you think, to get them to introduce and sell business protection?
I would say, look, like I said, they will be acutely aware that this costs more money than a regular mortgage. And I think the reality check for people is the reason this costs more is because it's higher risk lending and there's more risk that things can go wrong. It does mean this is not isolated. If something happens to this borrowing, there is an impact to your family, and because this is specialist finance, it's not as straightforward as us just bolting it on as a conversation to your mortgage. We do probably, as much as for the personal straightforward stuff, we want to try and do it all in one go. This is going to be a bit too in depth, especially because you're not necessarily going to be able to present answers and solutions either. You probably do need to hone in a little bit onto what can be done, and then we have to go away and work out the tax implications, and there's a bit more structuring that needs doing. So again, I would just sow the seed that we are creating a risk here. It does potentially mean we need to check that your existing policies are good enough and provide enough of a level of cover, in which case, hey, you're fine, don't need to worry about it. Or we need to have a look at the wider picture here. And if you're going to keep doing these, because very often these commercial borrowing, it tends to be something that we review. They're going to come back to you every 6-12 months. The whole business protection side of things is you probably want to be reviewing it annually as well to make sure amounts of cover are still right. So it's a very different protection conversation. So yeah, it's creating enough of a doubt in the client's mind that this is something that they need to do. But the reality is, you don't have to worry about it too much. You can talk to X, Y, Z. They're very approachable. You'll tell them what the situation is. I can probably share most of the details anyway, and you guys have a chat about whether it's something you need to do something about. And P.S. They'll make it as tax efficient as possible. That's all cherry on top. Yeah.
I like that. All right. What about yourself, Rhys? If people want to, they've listened to the call and they think, I really do need to talk about this, but I don't have the confidence. Obviously, they could learn and they could develop, etc. Do you take referrals? Do you build on referrals?
Yeah, I do take referrals. I think that's where most of my business comes from these days, which is nice because I only talk to people who want to talk to me. It's fantastic. So yeah, I do take referrals. So people can call me 07891619500. 07891619500, or I'm on LinkedIn. There's not too many Rhys Schofields. I'm the one with the big beard and the WWE T-shirt from that I got when I went to WrestleMania in Dallas, Texas, a few years ago. So I have seen Stone Cold Steve Austin in real life. Yeah, I'm that much of a nerd. But yeah, honestly, if someone wants to talk about that, they can. I think if someone's doing enough of it, I'll probably take a couple of referrals, but I might guide you in the right direction. You just need to learn to do this yourself, and I'll give you some pointers. I do also do some coaching where people will get me to come in and talk to their teams and build a sales process. And we were joking before we came on, the real art to it is making the team think it was all their own idea. That's just management 101, been there, done that. But actually having a process, and I have even done some follow-up work with some of those businesses over the course of 6 months, and you've seen actually the performance go up, and the big indicator being that all of a sudden, IP sales went through the roof, life only went through the floor. But that's probably right. People were actually having a proper conversation around what's most likely to happen to them, and I always thought that was a good indicator. Yeah.
I like that a lot. That's great, especially as you said, if they do a couple of referrals, they really ought to learn to do it themselves.
Yeah.
There's an awful lot of technical stuff. I get that with business protection.
I think if you do one every 12 months, I wouldn't bother learning, because it will take you a day to write a suitability report, and even then it will get wrong and you'll get a file fail, and it's not worth the aggro. And I mean, the first ever business protection case I did, this is when I was at Open Work, and I was a green advisor, no risk points whatsoever. One file check, I went from green to being a red flag advisor, which is enhanced monitoring and all that sort of thing, because it was multiple benefits and I'd done it wrong on the system. It was the right outcome for the client, but I didn't know how to write a suitability report, because networks are not particularly fantastic at telling you how to do the compliance side of things, because it's low volume business, and they'll let you do it, but they don't really have clear processes or anything like that yet. But maybe a few of them are coming around to it. Training's definitely got a lot better over the last few years, but it can go wrong quickly if you don't know what you're doing.
It can go wrong quickly if you don't know what you're doing. I like that. A lovely little final point. Rhys, you've given us your contact details, which is brilliant. We need to wrap up. Time is not on our side, I'm afraid. Fantastic conversation. Really in depth as well. You're free and happy to share how you do things. You're obviously very successful. More than that, though, you're a real human being, which I like about you. You're just normal, and I love that. I've been in the sector long enough to meet some certain types of people, but you're a real normal financial advisor, protection advisor. What is your title, by the way? What's your official title?
What am I these days? Protection. I got asked if I wanted a job title the other week, and I said I don't care anymore. Just protection advisor, that will do. People ask you what you do, and I say, hey, look, if it involves dying or getting sick, I'm probably someone that you need to talk to. But that's the best job title I can put it down as, because no one knows what you mean when you talk about employee benefits, and no one knows what protection is. So if it involves dying or getting sick, and the insurance to make sure that you're not screwed if it happens, talk to me. Yeah,
I always think that job titles are pay grades anyway in the corporate world, aren't they? Not so much.
Exactly. That's what a senior mortgage advisor is. So you can get paid more.
Brilliant, Rhys. Thanks so much indeed for your time, and we'll catch up with you very soon. Take care.
Thank you.